Welcome back then. Let's take a look at how the markets have performed then today. Out in Asia then, pretty much a mixed picture, but some positivity still reigning in most parts of the market picture. Only the Shanghai Composite out in China fell off 0.5%. That's nearly 19 points there to 3,340 points overall on that front. A sense of positivity still coming through with regards to the hope then that a stimulus deal will indeed come to the fore. But it is beginning to wane, and investors are beginning to perhaps feel the pinch there when it comes to that front then. Not sure. An increased number of coronavirus cases across the globe has also begun to hurt the markets again. Negativity then brings Europe into some red counters across the board. Around 0.2% lost across the main counters then out in Europe. It does sit in some negative territory. 22 points lost then for the DAX out in Germany. On the local front, we're sitting a little bit higher, having seen some losses yesterday. 0.4% to the good then for the JSE All Share today. 55,000 and nearly 300 points there. The biggest gainer seemingly being the resource shares, having gained more than 1%. Industrials close to 0.5% to the good. That resource counter going up 1% has been led then, of course, by gold mining and platinum shares. Those have ticked up more than 3% each. So doing fairly well across the day today, when there isn't too much to write home about when it comes to the equity market front there. The bank's gone down more than 1%, so the financials have lost, unfortunately. Also another loss then for the listed property segment, nearly 2% weaker as well today. Onto the shares that have gone higher today. Cartrack, Murray and Roberts, Kumba Iron Ore as well headed off into some positive territory. More than 5% lost across the board there, with Cartrack even gaining more than 7%. So really enjoying some positivity there at 44 Rand and 99 cents on that price. Hammerson, Vukile, as well as Massmart as well have fallen off massively today. Hammerson and Vukile going down nearly 10%, in fact, in this lunchtime trade. Onto the commodities board then. Brent crude has fallen off 0.25%, sitting at $42.35 a barrel. Still some questions around the demand concerns globally. And of course, if demand continues to fall, then it means you kind of have to lower the price in order to meet as many people as you possibly could. So that's why you're seeing a slight fall off on that front. It seems that demand, however, is coming back, even if it is ever so slightly for platinum and gold. Gold still hovering just above that $1,900 a fine ounce mark, having sat well above $2,000. This is still a little bit of a languish. It is up 0.5% though in this lunchtime trade. At present, there is some weakness then for the local currency against the US dollar, 0.33% weaker. In fact, 16 Rand and 51 cents for US dollar. The euro will set you back 19 Rand and 39 cents. That's 0.25% weaker for the local currency. But strength, of course, then when you look at the euro, the British pound is 21 Rand 42 as well in this lunchtime trade. Michael Traherne, portfolio manager, joins us right now, as well as from Vestact Asset Management. Michael, thank you so much for the time. Appreciate it. Not too much to really write home about, but questions will still be asked. Stimulus, no stimulus, elections coming through. Is there enough to drive the market? We also have US earnings season having kicked off yesterday. We saw JP Morgan beating estimates, but still not looking too good. Much the same as Citigroup, as lower interest rates began to eat into those loan books. So the global market picture not looking too rosy at present, is it?
Yes, Arabile. I mean, the main thing at the moment that seems to be driving markets is the fact that we've had two COVID vaccine companies now have to pause their trials due to people falling ill. And that's putting a bit of a dampener on things. Part of the issue is also that Europe is now locking down again. Some European nations are going back into some form of lockdown. And all of that's feeding into a bit of negative sensitivity coming into this week. And South Africa being seen as a bit of a risky environment. That's when we see the rand being a bit volatile and some of our local stocks struggling. It is good to see, though, that the JSE All Shares up today. So, yeah, not much to write home about. I think the main thing that the markets are still paying attention to is US elections in the next few weeks. What happens there? Who's going to win? How much stimulus do we get? Will there be any fireworks?
Yeah, it's 21 days that we have actually until that US election on November the 3rd. 3 weeks is all it takes, and we will hopefully, and I say hopefully because it certainly will get very interesting if things don't go a particular way out on that front there. Is there any way that the markets are sort of looking towards for any direction? I mean, you have the medium-term budget policy statement, which has now been perhaps will be postponed for another week. We're just waiting for the National Committee on Parliamentary Events to kind of agree to that postponement, really. And you have the President's speech coming through tomorrow on the reconstruction of South Africa's economy and economic recovery plan. Are those key things that the market will look towards perhaps for some sort of help, or will that be mainly currency-based?
For sure, you'll definitely see South African companies react to that news. I think tomorrow's announcement from the President will be crucial. I do think that each announcement that we have has less of an impact on the market. We've seen many plans from the government before. We've seen cases where the plans sound good, but the execution has been struggling a lot. So that might mute the market reaction. I think the budget speech at the end of the month, now penciled in for the 28th of October, that will probably be a big driver, particularly for our banks and the currency, as you mentioned. What does our debt to GDP ratio look like? What is it forecast to be going forward? And are there any hints of what would happen to taxes going through next year? So generally, the medium-term budget, there isn't any talk about taxes. But 2020 is a unique year, so maybe we get a hint of what is in store for us next year. So, a lot coming through on the local front. As in terms of the US and the international front, that election is going to keep things volatile, and the market hasn't made its mind up yet who it actually wants to win the election.
I just want to ask perhaps your opinion here. I mean, the Presidential Economic Advisory Committee has told the President that it may not necessarily be such a great idea to cut spending, and perhaps it's not a bad idea to be increasing that spending. Is that possibly the right piece of advice or right reading for the local economy, considering that we don't have the money to be spending at this time anyway?
It comes down to what type of spending are we going to increase or going to be cutting. So generally, if you're increasing infrastructure spend, that's very good because there's something to show for it at the end of the spending. It can be a short boost to the economy, particularly areas around infrastructure, so that's good news. If you're spending on things like defunct airlines or high wages for staff, government staff, those sort of things, that spending doesn't go away, and that's the problem. The government in 2008 increased the number of staff because of the 2008 Great Recession, and we're sitting with the problem now today where they can't cut back on that expenditure. So when you increase expenditure, it needs to be in the right places, and it needs to be in a temporary nature. It can't be in places where it's very difficult to cut back.
Yeah, that's 100% true. Look, things were certainly tough amidst COVID-19, right? And the month of, the month of August, retail sales figures have actually decreased 4.2%. Would that be surprising at all, considering that retailers were the ones who were primarily open amidst the lockdown, no matter what level it was?
So at a headline level, the economists were expecting a 5% decrease. So to see it coming at 4.2% is actually a beat on what was expected. So that's good news. I haven't had a chance yet to dig down into the details to see which areas were doing well and which areas were struggling. But I think in the current environment, to see a decrease is definitely not a surprise.
Yeah, certainly not. Very quickly then, the oil price pretty much still hovering above that $40 a barrel mark, between 40 and 45 really. Not really much to write home about. Can anything change it? Can anything sort of change where the oil price goes from here?
So the oil's been quite volatile over the last 2 days or so. And that's because there's been two big reports coming out. They came out yesterday. The one is from the IEA and the other one was from OPEC. They were looking at what current production looks like, what are the forecasts looking like. OPEC saying that some of their nations have increased production quicker than expected, so that puts a bit of pressure on the oil price. But I think the big driver here is what happens globally with COVID. How quickly do we reopen? How quickly does travel pick up again? And that's your long-term driver, and that's anyone's guess. I don't think anyone knows what's going to happen there, and as a result, I think you see oil staying between this $40 to $50 range.
Feels like that's what we talk about every day. It's just depends. It all depends, I guess. Michael, appreciate the time, though. Thank you so much for it. Michael Traherne from Vestact Asset Management joining us then as we unpack this market picture. We're going to take a short ad.